Hi, everyone. I'm Todd Rosenbluth, head of ETF and mutual fund research at CFRA, and I'm joined by Jay Jacobs, head of research at Global X. Jay, thanks for joining me.
Thanks for having me, Todd.
My pleasure. So thematic ETFs have really been in high demand pretty much since the beginning of the pandemic. We've seen a fivefold increase. What do you think are the key drivers of that overall asset growth, and how are advisors using thematic ETFs?
Well, I think a lot of it is just recognizing the changes that we're seeing in the economy. Some of these changes were accelerated by COVID-19, like the stay-at-home economy and work from home and learning from home and telemedicine and all these things that we do remotely or digitally now. But a lot of these things are longer-term trends that weren't just accelerated by COVID-19, but are technologies and consumer changes and physical environment changes that have been really building over several decades now, and are starting to have a material impact on the global economy. So when people think about, the use of thematic funds and how to put them in a portfolio, a lot of it is really just trying to align their portfolios with where the economy is going and where we're finding high growth. Previously, maybe people used to use more sector funds to do that, or more kind of go anywhere growth funds. But I think the precision that thematic funds give them in terms of accessing these growth opportunities and allowing people to use them as tools to really kind of modify their exposure over time is something that the market has really shown that they have a lot of interest in.
Well, you guys have been working on this in Global X for a while, but something you've also been working on is a charting disruption research report. Could you tell us about what it is and how it's relevant for investors?
Sure. Charting disruption is basically our 2022 outlook for thematic investing. We are looking across a variety of different themes. We organize charting disruption into 8 different chapters, things like mobility, blockchain, food and water, climate change, robotics and AI, digital economy. We have all these different chapters. And what we're doing is trying to really show readers where these themes are likely to go, not just in 2022, but in several years ahead. We're looking at the trends that we can observe over the last several years. We're doing forecasts. We've done a lot of survey work of consumers. We partnered with various experts who provided their own domain expertise in thinking about these themes as well and what they anticipate as the changes going forward. So this is really kind of the headline research project for Global X this year and beyond. And we could not be more thrilled to share it with people around the world.
Well, I'm dying, and I know the listeners are dying. What are some of the key themes for 2022?
Well, there's several. I think one of the key themes is going to be the inflection point that we see in mobility right now, particularly electric mobility. We've seen that electric car sales are now over 7% of total car sales in the world today. That might sound like a small number, but that is millions of cars that are now electric. Once you start to see that scale, you see costs come down. Once you start to see that broader adoption, you have more people espousing, the benefits of this technology. You see a densification of the infrastructure around that technology, whether it's charging at home or charging on the road. You see more mechanics that can work on electric vehicles. You see more third-party accessories. A whole ecosystem builds around this new type of car platform once you start to reach that scale. And we're starting to see that scale happen now. And we think that this is really a critical inflection point. That's just within the mobility space, but we have several chapters where we discuss various inflection points that are happening in these themes and where that sets us up for high growth in the years ahead.
So I want people to read the report, which they can find at Global X's website, I believe. But what's an underrated theme? What might surprise some folks?
There's 2 themes that don't get as much headline attention right now, but I think are going to be very critical parts of the economy going forward. One is ag tech and food innovation. When we look at what's happening with the pandemic right now and disrupted supply chains, we're seeing just kind of a small piece of this, which is how dependent the world is on relatively few systems to get food around the world. So we've seen rising food prices, and that's part of the rising inflation equation, but it hasn't become critical yet. How does it become critical? Well, you introduce more impacts from climate change, more droughts, more floods, more fires, more unusual temperatures that can greatly reduce the amount of crop outputs. You have water issues where it's getting harder and harder to distribute water where it's needed, which can further reduce crop output. On top of that, you have millions, hundreds of millions of people entering the middle class in emerging markets, which is fantastic for alleviating poverty. But it means more people are going to be, demanding more from the food that we're producing in the world today. And on top of that, we have all these technological advances that, in many ways, are going to be the antidote to those issues. How can we get more crop yields, stronger, more resilient crops? Use technology to reduce the costs of harvesting. So this is going to be a really critical area as we see ag tech really lead that fight against some of the demographic and physical environment changes that are impacting our agricultural environment today. The second theme that I think is following a little bit under the radar is hydrogen. So there's been a lot of focus on lithium-ion batteries and how they're being used in passenger vehicles. But when we look at heavy transportation, ships, planes, trains, batteries don't make as much sense. They're really heavy. They don't last extremely long. In some ways, they're not that robust. They can't really be beaten up over tens of thousands of charging cycles. Hydrogen is a gas battery, though, that's much more robust and much lighter. That makes sense in heavy transportation. So as we see more renewable energy production and the excess amounts of that production being used to separate hydrogen from O2 to create kind of just isolated hydrogen, then we have an entirely new fuel source that's clean and renewable that can power heavy transportation going forward.
So you touched on one of the themes that was very popular in 2021 of lithium batteries, and the other major theme that we saw from in ETF investor adoption was infrastructure development. Maybe let's start on infrastructure development. Is there still room for growth in that space?
Absolutely. I think one of the things that people miss is, passing of a major federal infrastructure bill like the Infrastructure Investment and Jobs Act is just the first step. It is going to take years, if not even potentially decades, to spend all this money and to have it start impacting the economy. So just because the money is now, available and can start to be used on projects, you have to do surveys, you have to do engineering, you have to do designing, you have to do environmental work before you can even have a shovel hit the ground to build a new highway or rebuild a new bridge. So this is going to take years. Those cash flows are not going to all kind of hit the economy at once. And then once that bridge is up and running, it'll still take another year or two for the economy to really build around that and to leverage the impact. So we're thrilled that the IIJA has passed. We're thrilled that there's more money for infrastructure going forward, but it's going to take time before this theme is fully kind of played out through this cycle.
Okay, and lithium, you touched on it briefly relative to hydrogen, but do you still think there's room for growth there?
Yeah, well, we touched on it a little bit before, but a few key things that are really going to push electric vehicles going forward. One is related to the Infrastructure Investment and Jobs Act. We're going to see roughly 7 to 10 times more charging stations in the United States due to that bill. That is huge for electric vehicles and thus for lithium-ion batteries, because what that means is it gets rid of 2 of the top 3 concerns by consumers about adopting electric vehicles. The number one concern was concerns about range, how big a battery is. And the third concern was hassles around charging. So if you have more charging infrastructure, denser charging infrastructure, you kind of knock off those 2 concerns. Suddenly it becomes, the other reasons why people might not like EVs, which is declining costs, which is the other piece that we see with lithium-ion batteries as well. We're seeing rapidly declining costs in batteries. We're even seeing a shift in battery chemistry away from a more expensive nickel-rich chemistry to a less expensive iron-based chemistry, which we think is going to bring lithium-ion batteries to the broader markets, electric vehicles to the broader mass markets. So we have 2 really compelling trends that are really starting to pick up in 2022 that I think will accelerate the adoption of EVs dramatically.
That's great. And I guess let's give one last one. Are there some contrarian ideas, things people might disagree with or have a debate as to whether this is a theme that's going to have legs?
Yeah, absolutely. I mean, I think, one area where people may have kind of maybe passed over a little bit is the power that still exists in robotics and artificial intelligence. This was a very popular theme back in 2017. But we've seen, some of the kind of bigger flows in Thematic going more into the mobility space and into the infrastructure space more recently. But don't count out robotics. We're really starting to see an inflection point Part of that is rising labor costs. So the more expensive labor gets on a relative basis, the cheaper robots get, because this is a one-time purchase of a technology, not an ongoing labor cost. And on top of that, the disruptions we're seeing in the supply chain today are making companies really concerned about, outsourcing labor overseas. If you can have increasing geopolitical risk, even just geography-specific risks with pandemics and regulations, a lot of companies realize that they don't want to depend on such overseas interconnected supply chains. They want to bring it back to the United States or to Europe, but they have to do so in an economically minded way. That leads to more investment in robots. We expect the industrial robots market, and we forecast this in Charting Disruption, to grow from about $16 billion a year now to about $37 billion a year by 2030. So that's that's around an 8% growth rate. That's pretty healthy for the manufacturing sector, which historically has been a very slow growing area.
So Jay, I may have gotten it wrong beforehand. What's the website people can go to learn more about this research that you and team have produced?
The website is www.chartingdisruption.com. It's an interactive website. I think people should find it really engaging to see these expert insights, to see the research, the surveys, the forecasts that we've done. And you can also download our entire report there, which is 123 slides across these 8 different chapters.
Great, Jay. Thanks a lot, and thanks for sharing that with our audience. Have a great day.
Thanks, Todd.